Hey everyone, Andy Moss here with tradingadventures.com with a quick midweek market update. First thing you notice on the roadmap chart here is 3 of the 4 major indices are below the 5-day moving averages. IWM is below a declining 5-day moving average. Only the Qs are still above and holding up pretty strong there. So a little bit of a shift here in things, nothing incredibly cautionary, but this is something we haven't seen since last time it dipped below a 5-day was not quite 3 weeks ago or so, back in the middle of May, and that led to a pretty mild pullback from there before things recovered. Maybe that happens again. We don't know for sure, but what we can say for sure is we've got a series of lower lows and lower highs below a 5-day. Not a declining 5-day yet on the SPYs, but we'll see how that develops. So just something to be mindful of there as the market takes a little bit of a break. On the daily time frame here, we see SPYs just now touching the rising 8-day moving average. So again, nothing catastrophic, nothing terribly alarming. Just at this point, a minor shift in the price action as we take a little bit of a breather. Qs, similar situation as the roadmap, although holding up a little better here, still above the rising 8-day. We do have a DeMark 9 sell signal here, which could mean some intermediate term exhaustion. That's what that stands for. That's what that's keying us in to be alert for. Certainly doesn't guarantee that it happens. Last time it happened, all the downside came pretty much in one day before it went back to a new high, and then a little bit of follow through on another trip there the next time around, but it held up very well. So again, just something to note at this point. Dow just a little below the rising 8-day. The level between the 8 and 21-day here is a little broad, that signals a strong trend and good momentum, but it also could be a little bit of a sign of extension. So, and we'll see some trips down to the 21-day in a few other names we look at here in a few minutes. this is still a bullish consolidation pattern up here, even though it's below the 8-day. It's right around this extension level, which if you saw the weekly charts video, you know that we looked at that and talked about the possibility that maybe we chop around here a little bit before it can go much higher if that's what eventually happens. Bitcoin is a different story, just getting crushed here. I shared this on X a couple of times as it's been finding resistance at this anchored VWAP from the all-time highs. It did that again over here with a declining 200-day moving average, and what we highlighted was this anchored VWAP off of the low back in February with a question mark on the post that I shared, posing the question, does this provide any support? Does it matter at all? And we now know that it did not. It just sliced right through and way down here into the mid 60,000 range now. So Bitcoin is really looking pretty nasty there. So moving into some individual sectors, semiconductor index, still the leader, still very strong. A little bit of a sell-off today at the open that was bought back up very quickly. And again, we have this non-sell signal here from DeMark on the daily action. XBI couldn't get going, couldn't make a higher high here, and now it is back down and testing this kind of level of polarity here from the last several weeks. That's a pretty important level. If it would get and stay below this, call it 127.50 to 126.50 range or 126.75 range, then it could move on back down towards the range of the rising 200-day, which coincidentally it also lines up with this level of what was a little bit of previous support. If I can get my tool there and drag it over, this 120s, if it breaks down, wants to go further, 120s would be a level of interest to watch and see how it reacts down in that area on the biotechs. Software has had a very strong recovery, and now a couple, really just one day of selling here so far, which is not at all unusual after such a strong move higher, followed by 3 days of gapping and moving higher still. So nothing surprising terribly there from the software sector. Mag 7 is a group, and this is what I mentioned a minute ago about some names being below their 21-day moving averages. This is back down below the 8 and 21-day, the 8 days curling over and into this area of the highs back in November, October last year. Mag 7 struggling a bit here, losing all of the short and intermediate term momentum and potentially room down further into the mid 66s as the 50-day rises up from just below that Financials, again, if you saw the weekly charts video, we were looking at the potential for financials to break out on a weekly chart and move higher. That would have added fuel to the bull market and given perhaps some power to move things higher. We're getting the opposite. If this is the weekly action in here on a daily time frame, we're down below these levels, down below the 50-day. We're below all of the moving averages here, and the 5-day is declining. So not looking great there for the financial sector on the whole. Energy, no real resolution, still consolidating in here. As if we were to look at a chart of the oil futures, it would be very similar. And let's just go ahead and do that. Here's crude oil. You can see it's a very similar chart, just no real direction there as it figures out what the heck is going on in the oil markets and the Middle East. And then quickly through the Mag 7 names individually, Apple is really the only stock that still looks healthy, if not extended. It is had a tremendous run. It will pull back at some point below the 5-day here, which is basically flat, and that one holds up really well in the Mag 7 group. But looking at the rest of them quickly, Amazon below the 8 and 21 day, testing the 50-day. Google looked pretty good some last week and now nearly testing its rising 50-day. Meta has a bit of strength today on some kind of deal news or affiliation. I don't remember what the story was, but that propped Meta up today. But still, it's right here around the 8, the 21, the 50. The 200-day is still declining up there, and it's still in this messy, choppy pattern here. Not looking fantastic there despite 1 day of buying. Microsoft, like the software sector, back down, and this doesn't look like great action in Microsoft. A strong breakout over the 200-day and quickly failing all the way back down. If you go back to the IGV on the whole, it's still in the far upper reaches of this recent range. Microsoft, on the other hand, has given back this whole move over the 200-day and back down where it started and below this anchor from the highs and below the 8-day moving average. It's not doesn't mean it's terribly bearish yet, but that could be an early indication of trouble there for Microsoft. It's just this kind of a blow-off move here that was quickly reversed. Nvidia, similar action there over the last few days, although still within the confines of a bigger move, and it's below the 8 and the 21 day here, but still well above the rising 50 and 200-day moving averages. So here's the anchor from the lows back on March 31st, and we could add another one on to this close here and see it's below that. So, more profit taking there across the board on the Mag 7 names. Finally wrapping it up with Tesla, trying to get going but consolidating here, retesting this rising 200-day and below the 8 and 21 day. So there's a lot of excitement, apprehension, ambiguity, all kinds of emotions around the coming SpaceX IPO, which undoubtedly is having some kind of effect, either positive or negative, on Tesla. So that probably contributes to the fact that it's a little erratic and ultimately not really going anywhere for the last month or so, nearly a month. So there's the market update on the whole. And back to the roadmap here, this is just early signs of maybe slow down a little bit. In Alpha Trends, we've been talking about this, looking at what's going on. There's still trades. There's still some really good setups out there. We've had some nice things occurring, but the lists are getting a little shorter and the price action looks a little more subdued here and I'm talking very short term here, over the last couple of days and basically this week so far. So just note the action there in the market overall. Pay attention to what you own, know where your stops are, and maybe consider being a little more prepared for further downside. Every sell-off to this point has been bought, and so maybe that happens again. We don't want to get super bearish or even bearish at all and scream that the sky is falling. That's not what's going on here. It's just a short-term pullback at this point. So we just do as we always do. We monitor the situation. I've got this pulled up here. This is the stock index futures on a 1 hour time frame to get us a little more of a view. And we've got this would be the daily 10 and 20-day moving averages here for some reference points on the SPYs or the E futures there. And we can see we've got levels to monitor down here. So before things look much worse, they would have to get through some of these potential areas of support and stay below them. Then we could start getting more cautious on perhaps a longer time frame, but that is not the case so far. So one day at a time, keep an eye on your levels, on your positions, know what you own, and know how to manage them.